Good morning. Welcome to Market Monday for March 11th, 2024. And we wish you the luck of the Irish on St. Paddy's Day this Sunday. Well, last week, Bitcoin reached an all-time high price, surpassing the $69,000 per Bitcoin level, right before selling off 8%. We've tiptoed around the topic of Bitcoin since December of last year, when we were confident gaining exposure to Bitcoin would be accessible through ETFs, inside of accounts that you already have. Again, for the record, this video is not an endorsement for or against Bitcoin. We are trying to go beyond the headlines to illuminate the asset class and perhaps some of the reasons why folks are compelled to invest in it. Bitcoin, and other digital assets for that matter, are polarizing. We believe stopping there is a disservice to you, our clients, and ultimately whether you take an interest in the asset class or decide to stay away, we'll be glad to know that you've done so as a well-informed investor. It's quite rare for a new asset class to appear out of thin air, but that's exactly what happened 15 years ago when a pseudo-anonymous white paper was published, Bitcoin, a peer-to-peer electronic cash system. There's still passionate debate about what Bitcoin is, and rightly so. Is it a currency? A security, a commodity, a technology, a network, all of the above? The most prominent use case for Bitcoin has emerged as a store of value. Store of value. Remember this? The purchasing power of the consumer dollar. Cash or dollars, definitely not a store of value. And in fact, looking at this chart could be the opposite. Store of value. Keeping pace with inflation. You've heard it here before, a lot. Keeping up with and hopefully surpassing inflation over long periods of time, like decades, is a primary reason for investing. We all like to see gains, but we would remind ourselves to step back and revisit the first principles of stock market investing, which is to keep up with or outpace inflation over long periods of time. But there is no perfect asset. And as we know, stock market investing comes with other features like uncertainty and volatility, drawdowns, potentially years of being underwater without breaking even. Those are features of stock market investing. So when it comes to a store of value, what comes to mind? Is there a particular asset, commodity, or security that you associate with store of value and potential inflation hedge? For many, it's gold. How did gold come to be the default store of value? Who made it that way? Why do we accept gold as the, if I may, gold standard store of value? And perhaps most importantly, if we take a critical approach, does it still deserve its default status as the store of value? When we talk about store of value, in one way or another, it always comes back to money. Store of value, store of money. But what is money? Money might make you think of cash and coins, but most of the time money doesn't have physical form. It's just numbers on a computer. Your investment accounts, another store of value, numbers on a computer. It's a way to keep track, to account for their stored value, and eventually to exchange it for real goods and services. Different items have stood in for money throughout history, including shiny shells, paper currency, precious metals like gold and silver, grains, even salt. The key is the shared belief in its value. As long as everyone agrees on its worth, anything can serve the role of money. The three major functions of money are medium of exchange, unit of account, and store of value. Those who believe in the value of Bitcoin do so because they believe Bitcoin acts like a new form of digital money. Because Bitcoin's quantity is limited, with only 21 million ever to be created, there's an element of scarcity involved, which potentially bolsters its role as a store of value. Bitcoin is the first and most well-known cryptocurrency or digital asset. The original aim was to make a type of money that people could send directly to each other over the internet, without having to go through a bank or any other third party. We'll continue exploring this topic in the weeks and months ahead with the hope of becoming the most informed investors that we can be. And today, we'll leave you with this. Did you think it'd be any different? Have a great week.